401.
Okay.
Rebecca.
Yeah, just now.
And Mr. Vishal is online as well. Just a mic check. 1 second.
Hi guys, good afternoon. Glad to be here.
Right, thank you. Over to you, Rebecca. Thank you,
Lara. Yeah, thank you, Lara. Now we shall start. Good afternoon, good evening, good morning, everyone joining us from India and other parts of the world. Welcome to this Rental Housing Policy Lab. My name is Rebecca Ochong. I'm the Senior Manager Operations for the Asia Pacific region at Habitat for Humanity International. This policy lab is the third of the four-part policy lab series on rental housing in India. It is jointly organized by the Center for Policy Research, GIZ, Cities Alliance, World Bank, Asian Development Bank, Habitat for Humanity, HUDCO's HSMI, and Asian Infrastructure Investment Bank. The first policy lab was held on the 16th of September and entailed the deliberations on the prevailing rental housing policy and regulatory arrangements and the ensuing interventions that would be required to stimulate a functioning rental housing market for the urban poor in India. The second one was titled Government-Led Rental Housing Models, Options and Challenges. It was held on the 29th of October, during which deliberations focused on government-led innovative approaches in the creation of affordable rental housing stock, including both greenfield projects and reuse of government-owned vacant housing stock. In this third policy lab, our distinguished speakers and panelists will discuss the viability of the rental housing policy with specific reference to private sector investment and partnering governments. The lab will draw lessons from international experiences that have addressed key issues in enabling private sector investment and innovations in rental housing. The presentations will then be followed by an open debate among industry experts. And now, without further ado, let us begin. I now turn the floor over to Rajan Samuel, Managing Director, Habitat for Humanity India, and Lara Shankar Chandra, Director, Strategy and Coalitions, Habitat for Humanity India, who will lead the next session. Over to you, Mr. Rajan and Lara.
Hello, everyone. Can you hear me?
Yes, very well.
Okay. Yeah. So this policy lab number 3, as Rebecca mentioned, we'll be looking at private sector investment in rental housing. What are the challenges and opportunities? And if we were to sum up, I think we are looking at the whole rental housing ecosystem. I think there are 5 key drivers that we'll be looking at in our presentation. Number 1 is, I think we need to identify the target group. The target group can range anywhere between, for India, migrants. Number 2, how do we attract private sector investment into rental housing? What kind of ROI can we guarantee? Number 3, how do we engage the government in a meaningful way? Because we have to secure land, we have to tap into all the incentives that is available for rental housing. And above all, I think there are also some subsidies, that is being offered by the government. So that's number 3. Number 4 is the whole issue of viability. When you bring in private sector, when we talk about PPP model, so we need to address the whole issue of viability. From a business standpoint, what is the business model are we looking at? What kind of operational model are we looking at? And the last one, of course, is how do we ensure scale and sustainability? By 2030, 2/3 of the population will live in urban areas. And it is estimated in India, in terms of the deficit, housing deficit, it could be anywhere in the region of 38 to 40 million household units deficit that you will see in urban areas by 2030. So that's the context. And so the subject for the first 2 case studies that we are going to be looking at would be looking at international and national experience. What are the lessons learned? What are the best practices in public provision of affordable rental housing stock through greenfield investment? I think that's going to be the subject for our case studies. So from now till 4:45, we'll be looking at two case studies. And the way we want to structure is we will have the case studies first, and then we will open the floor for question and answer. Okay, so let me introduce our first speaker, Paul Jackson. Paul is the CEO of Trust for Urban Housing Finance from South Africa. Paul holds a BSc in Agriculture, and he has an economics degree from the University of Natal. And he also has a BSc Honors in Agriculture Economics from the University of Pretoria. Paul has been, the CEO of Trust for Urban Housing Finance since the inception in 2003, and has been involved in the development finance since 1987. So he has been involved since the inception. He's got a lot of experience, and the Trust for Urban Housing Finance has been doing extensive work in the urban space, housing space in South Africa. And so without further ado, let's travel to South Africa. And I would request Paul Jackson to present the first case study from Trust for Urban Housing Finance. So over to Paul Jackson.
Thanks, Rajan. Is Paul here? Lara, do you see Paul? Ian, do you have any update? Ian?
And then should go to the second case study and then come back, or should we wait?
Yeah, I was just wanting to check with Ian before we do that.
Looks like Ian's her microphone is kind of not there. I mean, it's not showing. So maybe her microphone is not working.
Yeah, we have received Paul's presentation. So I'll just ask him to join. Why don't we go into the next case study till then?
Okay.
Sure.
Yeah.
Sure.
Thanks, Raj.
Yeah, so let's move to the second case study, and then once Paul is online, we will so travel with me back to India. Of course, we go to Paris. So the second case study is about how to develop formal urban rental markets in India. These are learnings from Tamil Nadu in India, and we have two excellent, eminent presenters. We have Claude. She's a housing economist from France, and we have our own Anidita Mukherjee, senior researcher for Center for Policy Research. Let me briefly introduce our presenters. Mr. Claude is a consultant with over 35 years of experience in housing sector, and he's a co-founder of the website. I don't know how to pronounce this. Yeah, politicoromint.com. He was in charge of housing at the French Institute of Statistics, and then he joined the World Bank as senior housing finance specialist. So I invite Mr. Claude to take the floor, and let me also introduce Anidita Mukherjee, who's our senior researcher from Center for Policy Research. Anidita Mukherjee is a senior researcher at the Center for Policy Research, working with scaling city institutions for India, focused on water and sanitation initiatives. Spanning almost 15 years of her career, she has worked with different sector partners, civil society organizations, and other bilateral and multilateral agencies, such as FPDO. She's been part of design, formulation, implementation of large-scale national housing program and various housing policies. So I would request Claude and Anidita to take the floor, and so over to you. Thank you.
Thank you so much, Rajan. And unfortunately, Claude is going to join around 4:30. He had some last-minute engagement. So how we will do our presentation, and that will allow me to Paul has joined. Paul, can you hear us?
Yes, I can hear you well. For some reason, I had a Teams invite in my calendar. My apologies.
No problem. So, Paul, Dr. Rajan had introduced you for the first presentation.
Yes.
You want to go ahead with the first presentation, then I can come in.
Okay.
Dr. Rajan, is that fine with you?
Absolutely. Paul, welcome to the lab, the third lab where we're looking at the private sector investment in rental housing. And I did introduce you, so over to you.
Thank you. I'm just finding my presentation here. Give me 1 minute. It is here, so I need to just go to the share screen. Hang on a minute, please.
No problem.
Hopefully you can see that presentation.
Yes.
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 Okay.
Well, thank you very much for the introduction, and I'll try and keep within 10 minutes. It'll be quite difficult, but I do intend to try, and Chair, please hurry me along. I'm Paul Jackson, and Lusanda Nechitenze is my colleague. We will be presenting a small company called Tough in South Africa. Essentially, we've been around for 17 years, and this basically shows the growth of our loan book over those 17 years. I'd just like to stop on this slide for a minute and say that we are a residential commercial property finance provider. So in other words, we don't do home loans, individuals buying houses or flats for apartments for themselves, and we don't do microfinance. We're a mortgage financing company that funds against the cash flows generated by the building. And we achieve commercially competitive returns for our shareholders. We compare ourselves with other financial services institutions, but at the same time, we make a difference. In other words, development impact. I'll leave the rest of the slide just for you to read. This is an important slide because we depart from the point that housing is not a social good, but an economic good. It's a real driver of economic prosperity, and it's part of the real economy promoting local economic development. And as a result, investments in housing should be demand-led. We believe it's an economic asset because it stimulates economic growth through urban densification, smart cities. It promotes SME development. And while I'm on that point, we are not a housing financing. We're a SME financing company, property entrepreneur financing company with a housing outcome. And we contribute to sustainable development through access to local economies, amenity, and infrastructure. And the last is that our investments have a positive impact on local government coffers. So the do good part of it, so we're a good business. We give competitive returns, and we do good in that we promote entrepreneurial growth, we promote local economic development, job creation and skills development, urban regeneration and densification, fiscal impact, and in South Africa, the very important critical issue of urban land reform. We are a conventional financial services company. We follow a standard best practice loan origination process, loan origination appraisal, or as the Americans would call it, underwriting process. closing and servicing. This is supported by an end-to-end IT system. It has very defined governance and credit procedures. The important point is that for a project to get approved at TUF, and I won't go through the detail of each component, it has to be commercially viable, and the borrower character assessment, being a hybrid assessment between credit history and a series of interviews and reference checking, must pass muster. TUF developed back in 2003, and initially we had early support from local DFIs. And we built a mortgage track record, which is about 5 years plus to even start getting the capital markets involved. We had a number of impact investors, in fact, before the 5 years was up, but as we went further down our lending, we started to get impact investors and some of the commercial banks. And then in 2012, we had strategic shareholders that came in from various companies looking for both impact and hard returns. And increasingly, we've moved to listed debt, to borrowing money at market rates from the capital markets. I want to emphasize, TUF's founding objective was it should not be reliant on concessional finance, because that would hamper our growth over time. The regulatory framework, I was particularly asked to deal with that. There was no special regulation for TUF in South Africa. We merely complied with the regulations, particularly around the National Credit Act. We are not part of the Banks Act or the Financial Services Act, but obviously are required for the sort of Know Your Client KYC legislation, the Companies Act, and then as a debt issuer, quite a lot of oversight from the Johannesburg Stock Exchange. But the emphasis was no particular regulatory relaxation for us. We merely homed in on a particular market. Here's one of the buildings that one of our clients, our emerging clients, funded. This was an old light industrial building, and he converted it to residential apartments. This is in the township area, so you can imagine South African cities has a sort of more formal, urban, dense kind of area around the city centers. Many of our city centers that have gone into a traditional urban decline. And then we have townships, particularly where back in the apartheid areas, people of color were required to live. Areas have become vibrant. They're quite close to the cities as the cities have expanded. And this is one of our entrepreneurs in her best outfit, with a house that she'd bought in that area and demolished and built there. And then this is just a standard refurbishment down in Cape Town. We do have a ancillary fund called the Untitled Equity Fund for urban land reform purposes, to assist entrepreneurs who borrow senior debt at normal commercial rates, at normal commercial conditions, and the Untitled Equity Fund assists them in dealing with their deposit requirements. I do want to make 2 or 3 extremely important points. The first is the belief in the ordinary person and the power of local knowledge. And these are all examples of entrepreneurs of ours that we financed. But in South African cities, there's a phenomenon underway where many small entrepreneurs, like the ones you see here, and many, many others, are starting to use their local knowledge, use their access to resources, and use their access to land to start developing and densifying our cities. It's been underway for a number of years, and it's gaining momentum. And it's driven by the power of local knowledge. So TUF's business is basically based on the belief that housing is firstly demand-led, and secondly, best provided by many small entrepreneurs who live and work in the areas they're developing. South Africa has a major urban sprawl problem. Initially, housing was a budget item, and South Africa, after apartheid, built 4 million homes, which for a country our size is an enormous achievement. But we changed it more to habitats. The policy changed more to habitats and human settlements. And it really was an important shift because urban densification is required for social and economic action. Poverty is entrenched if people are on the periphery, and there's a positive fiscal impact concerning densification. I'm pushed for time, so I'm going to leave that there. But to say that in addition to large mega projects, one of the ways, or a significant way of solving our housing problem and promoting economic growth and development in this area is to go with the concept of massive small. To do 200 or 200,000 20-unit projects per annum is what we are talking about this. It's usually in city, it will usually involve densification, and the government's role is to provide an enabling environment. And so we create massive impact, is what we say at Tough, through many small changes to the cities we operate in. So what's the role of the public sector? To focus on its core responsibilities, bylaw enforcement, building standards enforcement, those kind of things, but then to get out of the way. In South Africa, we have a phenomenon that government is slow and cumbersome and often becomes a problem in the rapid development that we need to see in our cities, but they have a critical role in these kind of things and by law enforcement. So our largest risk of development in the South African concept is dysfunctional local government. Rising administrative costs, taxation costs, which are anti-investment, poor bylaw enforcement, and this leads to capital raising constraints and lack of empowerment. If I can just stop on this point to make one other point. Tough has been successful by South African standards because it's had patient capital. Initially from DFIs in the form of equity capital, but later on through investors who have received commercially very good returns, but have not been in and out for 2 years, but have taken the sort of 5 to 10 year view. The second is that in order to be sustainable and replicable, we have tried to avoid being dependent or even seeking concession refinance. We seek normal commercial finance that we can borrow off the capital markets, lend in a commercially sustainable and profitable way, and create a difference at the same time. And I think I went a little bit over my time, but that concludes my presentation. Thank you very much, Rajan. Rajan, I think you're on mute.
Yeah, thank you very much, Paul, for an excellent presentation. Four quick takeaways from your presentation. We talk about disengagement of the government. So we don't need to engage the government. Don't look at subsidy at this point. You know, your business model is very tight. You're tapping into money from the capital market. You know, local knowledge is critical. You know, demand led. You know, and of course, it's economic good. You know, of course, you have a social agenda, but I think the focus is more on economic good. And yours is a mortgage finance company. So Paul, what we'll do is we'll take up questions after the second presentation, and so we'll come back to you later.
That's absolutely fine. I'll mute in between.
Thank you, Paul. Now over to Anindita.
Thanks. Thank you, Rajan. So our session, this session is jointly done with Claude Tafa. Claude will join in about 5 minutes or so. We have divided this session between us. I'll take you through the rental housing market presentation in India while Claude will take us through a few critical highlights from the model of private sector in France. So not for the wasting time, I'll start. My screen is big enough to go like this. Can I operate it like this?
Yes, yes, it's
Yeah.
clear.
Thank you so much. Thank you, Rajan, for your kind words. So India has been, about 22 million people lived in rented accommodation in 2011 in India. And also into the recent national sample survey that has come out projects this number to be 30 million as per 2019. So there has been a significant proportion of people who have been living in rental housing. However, Indian policies and programs have remained skewed towards increasing home ownership, particularly among the urban poor. However, as you can see, that there has been a steady increase in the proportion of renting among the urban poor. The bottom two quintiles in the consumption quintile, the bottom two shows a steady increase in resorting to renting. Now, the ongoing pandemic has also spotlighted the extent of urban mobility, which heightens the need to focus on rental housing as a solution for a significant proportion of urban. While during the lockdown, central government issued waivers, directives to have rent waivers for specifically urban poor renters and renter in general, inadequate implementation led to mass exodus of urban workers that we have seen who actually walked long distances on foot. So even if they would have, stayed back in the rental accommodation, I wanted to highlight that two of the most critical fail-safes against the pandemic, that's the social distancing and maintaining hygiene through frequent hand washing, must have been very difficult. As you can see, more than 60% of the renters are actually depending on shared services, much higher than the owners. And also the congestion is more rampant among renters. So against this background, Government of India came up as a reaction to this with a new scheme called Affordable Rental Housing Complexes, and within which they are intending to foster private participation in delivering rental housing at scale. However, as we all know, there remains a number of obstacles and perceived risks in renting. The quite common cultural bias, which cuts across various countries, low gross rate of return, lack of financial incentives, and perceived legal hindrances for repossession remains big challenges. As a result, most of the landlords prefer to keep their houses vacant, and the number is quite high. In case of India, it's 11 million as per 2011 census that was carried out. If we try and see this data a little more disaggregated, what we see that about 8 states accounts for 75% of renting that happens in India. And Tamil Nadu accounts for the highest share of these rented households, which at about 17%. As part of a World Bank study, which is under review and submitted as a draft to the bank, we took a deep dive to see the rental market that's currently there in Tamil Nadu. So not so surprisingly, Tamil Nadu is also one of the forerunners in passing the new tenancy law, which is formulated in line with the national law that is still under a draft stage. And it has many forward-looking provisions, but it has one critical premise on which this law has been formulated is that all landlords and tenants agrees to enter into a legally binding contract, and that all such contracts will get registered with the rent authority. However, registration remains a problematic area, as it can be avoided legally if entered into a 11-month contract. Unregistered contracts which accounts for about 80% at the moment, will remain outside the purview of this new law. Further, rent authorities are not even empowered to evict and repossess in case of dispute. It still goes back to the rent code. Rental yields are low, I told you earlier also, but the existing tax laws and the costly finances adds to the problem. The high cost of registration and stamp duties, property tax accounting for 6 to 12% of the lease value, deters many households to put their properties on rent. Further, due to the fixed standard deduction rates, there is limited incentives to invest in large maintenance. The draft paper also advocates for a lower mortgage interest rates to improve financing viability for the rental housing supplies. So all this put together kind of points out to the low income, low rental yield and rate of return, which lags far behind from the rate of returns that a saving bank account is able to offer. Further, savings accounts are much less risky. It's almost no risk with more liquidity. The risk-adjusted rental returns are often negative. The house owners, mostly small and informal landlords, end up renting to their kith and kin without a written agreement or leave their units vacant. So how can we solve this problem or at least attempt towards building a robust market? The first would be to minimize obstacles that reduce efficiency in the rental market. Paul has said that the government should be out of the picture. The broad frameworks of legal frameworks, if they are in place, planning frameworks are in place, that should be enough for the market to work. We need to also acknowledge the diversity among the tenants. All tenants do not require same administration of the policy. Standardized lease agreements can reduce a lot of cost burden on the tenants. Tax incentives and grants for renovation will be able to address significantly in releasing additional rent into the market. Apologies for that. This has to also seems to be more effective if it is coupled by financial incentives. Policy to account the National Urban Rental Housing Policy, which remains in a draft forms, accounts for market segmentation, but a little nuanced segmentation will help, given the social renting requirements are quite high in case of India. Other than that, one of the major reasons for this gap that remains is also data. The last detailed survey was a national sample survey in 2007-8 that happened for migrants and renters. So there is a huge data gap, and this needs to be built in through adequate research. To bridge the gap between the landlords and the tenants, IT-based solutions, as Paul was mentioning, could solve a lot of problem that India is currently facing. Thank you so much, Rajan, for this opportunity.
Thanks a lot, Rajita, for a great presentation. Has Claudia joined us? Oh, he's there, yes.
Claude is here.
Yeah. So, Claudia, over to you. Anandita has touched on the case study from Tamil Nadu. I'm sure you're going to add your bit.
Good evening. Sorry, the sound is not very good. I couldn't hear your question.
Claude, Rajan is requesting you to share the France presentation.
Oh, yes, of course. I first try to share my screen.
Yes.
Is it okay?
Yes.
Yes, please. We can see that. Yeah. Thank you.
So why speak about France? Not only because I'm French, but because surprisingly, we'll see some similarities between the situation in maybe not India, but at least Tamil Nadu, because I cannot pretend that I know every Indian state. And what happened in the private rental sector in France and and what we tried, the authorities tried to do to improve things. So I think we have a limited time, so I'll go rapidly on an overview of the French housing stock and production and housing policy. First, I mentioned the parallels between France and Tamil Nadu. First, we have the same population, more or less, right? And well, for the rest, of course, France is very urban. We have small average household size because we have an old population. And we built, you see, it's the yellow graph. We built about around 400,000 housing units per year, which more or less correspond to our housing needs. So everything would be nice. The problem is that, of course, we have high density, high pressure areas like Paris region, where, of course, it's much more difficult to build, and this is where most of the problem lies. We have a rather balanced tenure distribution, relatively low ownership rate, and a large social rented sector, and also rather large private rented sector. Compared to England, for example, they have more ownership, similar ratio of social rental, and they have less private rental than we have. The rental stock, as you can see on the right side, the blue is the private. You see that the private has been decreasing until the mid-80s and then coming up again. And the red one, which is the social one, kept increasing, even if many people, of course, think it's not enough, because this is where the poorest family are hosted. So how did we try to move this down? Yes. So as you can see, the housing policy has 3 legs: ownership, social rental, and private rental. This support is rather general support as a cost, which is 1.7% of GDP per year. This is rather high. You can see on the right that it's also rather balanced between the three tenure, which are and that private rental has a large part of the support. This support, as we will see, is mostly under the form of housing allowances, which are for all poor tenants, even in the social and in the private stock. And there is an important tax part for tax credit, which is mostly for the private rental sector. We can be generous with subsidies because we have a high level in taxation and also a high level of budget deficit, which of course terribly increased after the pandemic crisis. I can go rapidly over tenants and landlord characteristics because they are quite expected. The tenants are mostly young, not rich, have a small size, but they pay a lot for their housing compared to their income. And last but not least, it's a very mobile population. Half of them has moved in the last 4 years, and the mobility rate is about close to 20%. This is probably the main reason for why the state, the government, encourages production of private units. It's to facilitate young families, young individuals and young couples mobility for reasons linked to their job. The landlords, the main characteristic is that they are almost all individuals. We have a few insurance companies. They used to have a large stock in the 60s and 70s, but they all went out. We have no pension funds, And we have some REITs, the acronyms that you can see, SCPI and SIIC are two different forms of French REITs. But as most REITs, they are most invested in commercial property and very little in housing, even though they can benefit from the tax incentives which are for individuals. So these individual landlords are in majority rather old, not all retired, but above 50, and of course in the upper quartile of income distribution. As Anindita told us, regulation of tenant-landlord relationship is key to maintain a large enough private rental sector. By chance, our background has been rather stable in the last about 20 years. The rental agreement has to be in written form. It must be 3-year minimum when the owner is an individual. The landlord may not easily terminate the lease. There are limited cases when he can do this, and usually it's only at the end of the 3-year lease. To terminate the lease before the expiration of the lease, the landlord must have defaulted in a serious way. On the contrary, the tenant is more or less free to terminate the lease with just a 1 or 3 month notice. A French oddity, I think it's rather special, is that no eviction is permitted during winter time from November to March, because unlike India, you know, France is rather cold at this time of the year. This is less in balance than it had been in the past, but it's still in favor of tenants. And on top of that, when there is a case, the justice most often is in favor of the tenant because it's supposed to be the poor while the landlord is supposed to be the rich. It is caricatural, but of course this is what happens many times. Another issue is that even when the justice gives reason to the landlord, the local authorities will be quite reluctant to evict families. So that will take very long time and sometimes will never happen. Another big issue in the regulation is the rent setting. I have no time to show that in detail, but the government has desperately been trying to limit rent increases because in spite of the increase of this stock, it's still not enough compared to the demand in large cities. So we have now a rather complicated system which says that the principle is that the first contract is more or less free, at least for newly built units. Upon renewal of the contracts, there is a limited possibility to increase rents, at least when it's proved to be overvalued, some undervalued, of course. And during the lease, the rent is pegged to an index which is more or less the consumer price index. You see that there are 2 columns because recently we have introduced a way that we call the German way to try to tie the new rents not to the flow of, not to market rents, but to stock rents, which obviously are much lower. This is more or less a return to a kind of something between a soft and a hard rent control, which is criticized by even by the government, but which has been put in place by some socialist, I must say, municipalities, including Paris. Taxation. I will not describe in detail. We are, as everybody knows, we are heavily taxed. We have, of course, rental income tax, we have property tax, and on top of that, we have a wealth tax, which is now focused only on real estate property. So if you add up all this, of course, there are people who do not pay taxes, but they are rare among rental landlords. I made a funny calculations. If you pay the maximum tax rate for rental income is about a little more than 50%. But if you are rich and lucky enough to pay the property wealth tax, you may reach 90%. Of course, this concerns very few people. It's just to give an idea of how the pressure can be if you are rich enough. Of course, you also have capital gain tax at a rather high level, which is reduced after 5 years, but totally disappears only after 30 years. You have to be very patient. And we have a tax on vacant dwellings to try to incite people not to keep vacant property without occupants, which after all is not a stupid strategy, because of the high prices and the gross rental income is something, let's say about 4%, comes down to 3% after taking accounts of the different costs, and goes down to something between 1.5% and 2%, taking into account taxation. So people are more, of course, they have leverage effect when they resort to credit, because you have also very low interest rates. But most investors are driven by capital gain expectations, because prices in the Paris area have been most of the time increasing rather fast. And well, when you are in a country where taxes are so high, you can be very sensitive to tax incentives. This is why this instrument has been used by the authorities to try to support the production of new rental houses.
Sorry.
Too late.
You have a minute to wrap up, Claude. I'm sorry.
I'm coming very rapidly because the rationale I can be very short, because I already mentioned it, to encourage young people mobility. The other reason is that the institutional investors had more or less disappeared because of the unbalanced relationship, the return, etc., etc. So we introduce different schemes. The one which is in actually existing allows to deduct about 20% of the price, of the purchase price of the units, spread over the duration of the time when it has to be rented. You get 21% if you commit yourself to rent it during 20 years with a maximum rent, which is 20% on the market, and the maximum income for the tenants. So this has proved very, This proved very efficient to increase the number of units. It became very important for developers because it's approximately half of the production of developers. And a few drawbacks, of course, that as it's not for home ownership, but mostly for rental, there are some issues about qualities and prices. And also a pervert effect about the location, because the rate limit, of course, is not set by district, it's made by large zones, so the developers find the right zone to invest, and it's not exactly when the needs are the most important. Anyway, you should just keep in mind that these tax incentives, because taxation usually is very high, had been very efficient to incentivize private investors into the rental housing. Thank you, not too late.
Yeah, thank you, Claude, for a very insightful presentation. In the interest of time, I'm not going to sum up the two presentations. I've written three similarities between what Claude and the presented. Number one is regulation is critical, both in the case of Tamil Nadu case study and the France case study. Number two is that there is a big chunk of social renting. We call it socialized housing or social renting. That's number two. Number three is that what Anudita shared was in terms of IRR, it's negative. That's because of some incentives, regulations, etc. The fourth one is in terms of the tax in India is 30%. You pay tax on rental income, whereas in the case of France, it's 36.20%. So we have about 9 minutes before we have the plenary session. So we can take 3 questions. One for Peter, and then one each for Claude and Anita. So sorry, Paul. So let's take the first question. Lara, do you have the question?
Yeah, so there's a question to
Paul, is it? Or to
yeah,
Paul?
to Mr. Paul Jackson. The Sophia Joseph from Habitat asks about how did you really manage the entrepreneurs who have come into rental housing, and what is the kind of support that the government can provide, because mostly these facilities, they kind of slack even though when they're run by the government. So how has TUHF group, and maybe he can bring in Uma Standy here, as to what is the experience on really enabling the entrepreneurs into rental housing.
Okay.
Paul Jackson.
Thank you for that question. Yeah, we tend to avoid interacting with government on things like that. We have a substantial program of support that we run ourselves at our cost. And it's broken down into 3 components. One is a induction program, which basically spells out in quite a lot of detail the obligations of entering into this financing contract. The second is we have the TOUGH, and please do call us TOUGH, which is the acronym TUHF, but we like to be called TOUGH. The TOUGH program for property entrepreneurs, which is an accredited program through one of our major universities here. It's an online program with people coming into the office looking at the questions of being an entrepreneur, the investment, et cetera, And the last, and I do want to emphasize, probably the most important, is a mentorship program. And here we've got entrepreneurs of similar sizes, similar backgrounds, similar cultural language and other experiences who mentor other newcomers because they can see the world through that perspective. We have a similar program in the Uma Standy developments, being the more township and smaller base. I forgot to say our average loan size in TOUGH Limited, our conventional business, is running at about 8 million Rand, whereas the average loan size for our Uma Standy developments is under 1 million. So it's a very strong on average. I mean, we have projects in TOUGH Limited that are around that level as well, but on average they tend to be smaller projects. So we have a very strong level of support. The only caution that we give is that you should give support to the line where the responsibility for the loan and the contract and the performance of the project remains very much with the entrepreneur, the SME, and that it's not by somehow taken over by TOUGH. This is a support to the entrepreneur at its most basic. I'll leave it there.
Yeah, thanks, Paul. Let's take the second question, Lara.
Yeah. So, Paul, there are more questions about income level of TOUGH finance projects and the rate of return to TOUGH rental housing projects. If you want to take that in a minute, and then I'll go to Claude.
Yeah, I was interested in the presentation by Nindita in respect of returns. Investment in rental housing is profitable in South Africa. We basically fund rental, our clients fund rentals from about 1,500 Rand, $100 per month, I guess, through to 5,000 Rand. And if you use the exchange rate of 15 Rand to the dollar, you get an idea. So ours is for poor and moderate income earners, but not for the very poor. They fall outside that sort of commercial side that we finance. The rate of return is usually an initial yield of about 12%. In other words, if you take your project rental income less your project costs and divide that by the total investment, you are getting about a rental yield of 12%. Our inflation currently runs, well, it's a bit lower now due to COVID, but on average runs within a band between 4 and 6%. I can assure you that the return is many times the savings rate. I think that's the important. It's not clear how you could have a risk-free rate and you would invest in a risky project at the same rate as a risk-free rate. So the returns are sufficient to justify the risk that the SME is taking.
Right. Thank you so much, Paul. In the interest of time, I do see Anindita has answered the questions that have been addressed to her. There is one question to Claude, and I may request Claude to please briefly respond to this question, and then we will move into our keynote speaker who has already joined us, Dr. Hiranandani. So to Claude, what are the key incentives being given to private sector for private-led public rental housing projects? And is private corporate sector involved in France?
Well, that's a tough question and it's difficult to answer in less than about an hour. Private public in terms of what we call social housing is, I couldn't say meaningless. There is no public housing in France. We have registered social landlords, which are the same as in England. We have the equivalent of council housing, which is local public enterprises, and we have non-profit sector, just like the housing association. And we have also some what we call mixed economy, PPPs, between private and public. So what we call the social sector has specific rules concerning incentives, totally different from the private. They consist in tax subsidies, in very low interest rate loans, which are financed through saving booklets, which exist in several countries, but they are transformed into long-term cheap loans. And of course, on top of that, we have housing allowance for tenants in both sectors. When you are asking if private corporate sector is involved, yes, we have a specific taxation again for enterprises who were supposed to pay 1% of the salaries to help to contribute financing the social housing stock. It's now less than 1%, but it still exists. They're also, these 1%, they also are directly invested in social housing.
Thank you, Claude. Thank you so much. Yes, thank you so much. I'm going to, Rajan, would you please introduce our keynote speaker? And I see 2 hands raised. I'd please request Dr. Suresh and Mr. Isaac to type your questions in the Q&A handle or in the chat, please. Over to Rajan.
Thank you.
Thank you, Claude. Thank you, Anand.
Yeah, on behalf of the policy lab group, I want to extend a heartfelt thanks and appreciation to Paul, to Anindita and Cody. So let's give them a big round of applause, ladies and gentlemen. So we move to the second section of today's deliberation as a keynote address. So it's my pleasure and honor to introduce Dr. Hiranandani. He's the founder and chairman of the Hiranandani Group of Companies. He's currently the president of Naradco, and he's also an active member of Habitat India's advisory committee. Dr. Hiranandani started his career as a chartered accountant, and he has built many things. He has built many people's lives. He has built many institutions. He has built many policies and programs. And one of the things he has built is also a hospital, and he calls this as a building of passion. So he's a great builder, and he needs no introduction. And Dr. Hiranandani, thank you so much for taking time to join us for this Lab 3, Policy Lab number 3, where we are looking at private sector investment in rental housing. So without much ado, I want to welcome you, and I want, the floor is yours to present the keynote address for us. So over to Dr. Hiranandani. Thank you.
Thank you, Rajan Samuel, for the very kind introduction that you have done. And thank you very much for the invite to this eminent group of people to which I am addressing today. It's my pleasure and privilege too. The Prime Minister, Mr. Narendra Modi, has been in the last 5 years very, very, very aggressive in providing affordable housing for all in the country. The target has been to construct, develop 12 million houses. All these 12 million houses are being worked out in terms of planning, in terms of location, in terms of approvals, in terms of financing, and these projects are already off the ground. So out of 11 million houses, already 3.6 million houses have now been complete. 8.2 million houses are now under construction in terms of being above the ground. And these are spread over all parts of the country. Unfortunately, some of the prominent locations like Delhi, Mumbai, and the regions around large metropolitan areas haven't been able to give enough land where actually the needs have been the highest. And hence there has been a challenge in terms of this segment of housing for the poorest of the poor. And that continues to be the challenge. However, you must recognize the fact that this deficit, which was calculated, was on the basis that they would make housing for all in terms of ownership. Now the recognition has taken place, and the Prime Minister and the Housing Ministry, Mr. Hardeep Puri and others have now reworked out a second plan. The second plan is affordable rental housing policy. And this also has been announced by the Honorable Prime Minister in July 2020. And that is in the midst of this pandemic. One of the instigators of this policy has been the movement of migrant labor. With the pandemic taking place, migrant labor in millions went back to their hometowns. As you must be aware that the entire northern belt provides migrant laborers to come and work in the western and southern part of India. So states like UP, Madhya Pradesh, Bihar, Jharkhand are the sources of migrant labor, while cities regions like Delhi, Maharashtra, Tamil Nadu, Mumbai region, Karnataka are all the recipients of these migrant laborers. So a focus is now being thought of as to how can we do with this 100 million migrant labor. It's a humongous task. However, the Prime Minister has said, yes, we must take it up. And the policy is now being laid out by which the existing policy which acts today will be changed, will be financed, will be worked through in this. 2 or 3 directions have been taken. Direction number 1, land which will be in the government sector will be utilized for this, and land in the private sector will be also utilized. The land in the government sector is being identified where surpluses lands lying with various departments of the center and states on a voluntary basis would be put up for this housing segment. The second part of it is that there would be adequate incentive in terms of buildable areas, in terms of taxation and others, some of which is expected in the next budget. Some of it has been laid down in terms of the policy. But however, those policy details will have to come into the Income Tax Act in the next budget so that the implementation can take place into this segment. The third part of it, which is interesting, is a pending Model Rent Act law. This Model Rent Act law was put up by the ministry about 3 years ago. I may be wrong. It could be 4 years. It could be 2.5 years ago. I can't recall the exact time. And they did a Model Rent Act wherein an incentive would be given both to the landlords and the tenants in order to provide adequate returns on the investments made by landlords, especially in the case of newer rentals. And also, the persons who have taken the tenements would also get protected during the time of the tenancy. And unless there is some very severe issues, the landlord would not be able to vacate. Of course, he would be able to vacate if payments are not done. That is the provision of the law. However, we must understand that in the federal structure of India, this policy has to be ratified by the states. And since a large majority of states are under the BJP influence, it is expected that most of them will get passed and approved in many parts of the country. However, with the differences which exist today, some of the states obviously are not going to cooperate or may provide for a different law than what has been suggested by the central government or the federal government, as is understood by many of the people who are not in India. So long and short of it is, we have a threefold direction. The threefold direction is those in the affordable segment, a policy law is coming up wherein incentivized basis in terms of tax and others would be provided so that there would be sufficient incentive for a person to give the apartment on rent and not keep it vacated, not keep it vacant. On the second part of it is that both the central and the state governments will now work on the affordable rental housing policy, and these will now provide for various people and sectors which would include migrant labor, but it would also include street vendors. It would look up student housing, and all these aspects of it are also to be considered by the government in terms of the policy note that they have issued. So the idea basically being that the thought process earlier, which the Prime Minister had initiated, was housing for all on an ownership basis. Later on, it was realized that this is not really going to be work. It cannot be possible for each and every one to own a house in the country, and there's no need for it either. So the second policy which has now come out is more clear in terms of the general situation which exists all over the world. So whether it's America, whether it's France, whether it's China, whether it's Russia, Eastern countries, Western countries, Middle East, all the countries in the world have both these segments which are available, namely ownership housing, B, rental housing. Both these segments are to be taken up into the consideration for this. And now it is to be seen how the post-COVID story will pan out, both by the states and the central government, in order to push the initiatives in terms of both the segments of the housing. One, which will be driven by investments from the top end, which is the affordable segment. And the second, driving the affordable rental housing policy, which they call ARHS policy, which is really something which will have to be driven by additional incentives which are planned, some of which have been declared in terms of FSI, etc. Others in terms of taxation are still to be announced, and those segments are likely to take place. The long and short of it, the story is that the next rollout is taking place in terms of this segment. So Housing for Humanity must take into consideration to participate in the venture of the Prime Minister in terms of this segmentation, as there are sufficient incentives available in order to take care of this, which I think in the long term will be a very good story for India and also an example to the rest of the world. So thank you very much. I'm ready for any questions, if any. And if there are any issues in terms of this subject or any other subject in relating to housing, I'm quite happy to answer. Thank you very much. Thank you.
Thank you very much, Dr. Hiranandani, for laying out the kind of a blueprint. And you started off with the vision of Prime Minister, how we started the housing for all, and the threefold direction that you spoke about. One is the affordable, segment. We can expect some incentive and tax incentive, so that I think we need to ramp up the deficit that we see in the affordable housing segment. I think the second point that you mentioned is inclusivity. I think that's going to be important when we're talking about state and the center coming together and looking at this, the huge demand that exists, including migrant workers. I think that inclusivity approach is something that we are all looking forward to, so that we can together, address the deficit that exists in urban areas. And the third one that you spoke about is the ownership housing versus the rental housing. And I think with the policy, as they roll out the affordable rental housing policies, the incentives, and the operational dynamics, I'm sure that it's going to provide clarity for all of us in this space, especially for Habitat, so that we can join hands with the government and also bring in the private sector. I think that is where we would like to see scale and and sustainability of all that we do in addressing the housing deficit in our country. So, Dr. Hiranandani, again, thank you so much for sharing your wisdom and sharing your time with us. And I don't know whether we have any questions for Dr. Hiranandani. Lara, is there any? Do we have time for one or two questions? Lara?
Lara is muted, I think.
No. If anybody wants any question from the panel to Mr. Hiranandani?
Dr. Hiranandani, Vijay here. I don't know whether you can see me. No, I don't think you can see me. This is Vijay. Yeah. Doctor, we did a kind of a back of the envelope number crunching, did the quantification of only the central government incentives, including the technology innovation grant. We jumped at it because our technology, as you know, 3D casting, is eligible for TIG. It appeared, with your chartered accountancy, with your industry leadership, I wanted you to check and tell us, it appeared just the incentives of the government of India alone, not counting FSI, not counting state government incentives, over a period, if we take the interest subsidy also into account, can, over a period of 20 years, can pay for the building. It's too big. So I was very, very, kind of skeptical about how could they, at least as a policy statement, announce, whether it happens or not, we need to wait. But I thought, whether you had an opportunity to quantify those things and see whether that is real or just imaginary.
See, the point is very simple, that the policy measure and the objectives are real. And the problem is real, Mr. Vijay, as you are aware, and I am also equally aware. The issue is that when the fine print does come out in terms of the policy measures and the financial implications, as well as the tax reliefs that come up, I think the items would be very much more clearer than that. But I think one of the things which is I found very transparent was the intent of the government was very clear. But however, you and I are both aware that many of the rollouts don't figure out in the manner in which the intent is. And we will wait and look forward to all these incentives, as well as the policy measures which will come out in fine print ultimately. So I think the budget of India will actually, Mr. Vijay, give us a full picture as to how strongly they want to go into the rental housing segment. You must have also realized by now that huge amount of investment incentives are given under the PMAY, Prime Minister's Awas Yojana. So that has definitely worked out extremely well. A 3% interest subvention for a period of 15 years on houses up to 45 lakhs of rupees has been lapped up in the private sector also in a very huge way throughout the country, and a lot of it is working. But your question is a good question, but I don't have that answer just now. I hope that the budget will clear it for you and me both.
Thank you, Doctor. Let's hope and pray.
Yeah. So Lara, any other
Thank you,
questions?
Dr. Hiranandani. Would you have time for another question or?
One more question is fine.
Okay. I can see Mr. Balaji Rao's video and he would like to ask your question. Mr.
Good evening, sir.
Balaji, please introduce yourself and ask your question. Thank you.
Good evening, sir. This is Balaji here. I just wanted to check with you, sir, if through Neredco or through your good officers, whether rental housing also would be considered as a industry status as they gave it to affordable housing. But will affordable rental housing also get the industry status for banking purposes, which would be useful? And whether any loans given for the affordable rental housing complexes be considered as priority sector lending, which would give a good impetus to this whole movement.
So, Mr. Balaji Rao, it's a very good question. The answer is you will get priority, but now the banks have got so many matters on priority that somehow or the other, unless it's a fiscally, financially prudent scheme, which ultimately has viability, which I was just asked earlier, unless that part of it does not work out with the tax benefits, etc., does not work out, the banks will not be giving it. So, the schemes have to be ultimately viable end to end, whether it's 1 year, 2 years, 3 years, 4 years, 5 years. And the banks will have to ascertain the possibility that with the rents coming in and the tax benefits, you would be able to pay back the loan. Then only then will the banks give the money. Even if they are treated as priority loans, they will not get the loan because the banks now do not want to give the loans if they think that the viability is not there. So I don't think there is anything else.
Thank you, sir.
Thank you. Thank you very much. And I'm so happy to be with you. Thank you.
Thank you. So on behalf of the Policy Lab core group and behalf of all the participants, we'd like to extend a warm thank you to you for taking time out to be with us. Thank you again, sir.
My pleasure. Thank you.
Thank you so much.
Yeah. Thank you, everyone. And over to Lara to take the proceedings further. Yeah, over to you, Lara. Thank you.
Thank you so much, Rajan. Thank you so much for really holding us all in that engaging case study panel. And now I am going to introduce the panel discussion. This is what needs to be done to encourage private sector investment in rental housing. My panel of 6 experts are all here today with us. I'm going to introduce them one by one and request them to please switch on their videos. And we have Mr. Balaji Rao, Managing Partner, Real Estate Access AMC Limited. Hello. He's a chartered accountant and a PGDM from IIM Kolkata. He's a fellow member of the Royal Institute of Chartered Surveyors. He has worked with Starwood Capital India, TCG Real Estate, ANZ Bank, Standard Chartered Bank. He's a seasoned real estate investment and asset manager, having over 25 years of experience in land acquisitions, property development, marketing, leasing, and capital structuring. And we have, and he has a deep understanding of Indian markets and a track record of successfully developing diversified real estate projects. Mr. Dhyan Beliappa, he is the co-promoter and director of Arusha Homes Private Limited. He has over 23 years of experience in designing and managing housing projects. He is an architect with a master's in urban planning from CEPT University. He has worked on designing a range of products, including educational campus, institutional buildings, environment and heritage conservation sites, boutiques, restaurants, and homes. Mr. Dhyan has been an associate consultant to the Lal Mott McDonald for design of Town Panchayat office building for the town of Maddur in Karnataka, and also the redevelopment of 5 lakes in Mysuru. Mr. S.J. Vijay is the founder and director, Saman Leap Ventures of Home Mission India Private Limited. 35 years of experience in banking, finance, policy formulation, core and urban infra development. He established Saman Leap in 2002. Saman Leap Associates is a consultant providing insight-based services, expertise, and investment-based collaborations in the area of infrastructure, including special economic zones and digital infrastructure, solar energy, project finance, fund and asset management, and expertise sourcing and building. He's an alumni of the Jawaharlal Nehru University of New Delhi. We have Vishal Goyal, co-founder Sirestra Ventures. Vishal Goyal is an alumni of Harvard Business School and Harvard Design School. He has more than 19 years of experience in investment advisory and extensive exposure to global REIT practices in core business areas of operations, acquisition, financing, leading, and underwriting. As a partner of Sirestra Advisors, he conceptualized and executed investment strategy across its edu infra and business parks verticals. He was also instrumental in conceptualizing and developing Genome Valley Knowledge Cluster in Hyderabad city. He has worked with Ernst & Young for over a decade and has been advisor to the government of Gujarat for Vibrant Gujarat 2005 to 2009. We have Rajesh Krishnan, Managing Director and CEO, Brick Eagle Group. Rajesh Krishnan is the founder of Brick Eagle Group, a financial services platform focused on affordable housing. He started Brick Eagle in 2011 with a vision to deliver 1 million affordable homes by 2030. What started as a land banking company has transformed into an affordable housing ecosystem under his leadership. Till date, Brick Eagle has incubated 5 developers and 8 service providers in the affordable housing sector. And my last and youngest panelist, Mr. Uday Lakkar, founder and CEO, Coho Co-Living. He's a full-time entrepreneur and investment management professional, experience in private equity and venture capital investing, worked an investment professional, consultant, and finance analyst across organizations like McKinsey, Morgan Stanley, Irio, Capital 18, and EXL Service. He's the founder of Coho Co-Living and student accommodation brand in India. Welcome everyone to this panel. Do I have everyone here? Can I see Uday? Yes, all right.
Yes,
and we've already, yeah, thank you. We've already done a sound check. Now, all of us are aware of the policy. We've heard the 2 experts from South Africa and from France and our learnings from Tamil Nadu. What I'm going to do now is to individually ask you to give your initial thoughts on the rental housing policy, the ARHC scheme, and we'll move from Mr. Balaji first.
Thank you, Lara. I think when you look at in context of today's environment, this policy for affordable rental housing, what we are discussing today, has just been very opportune because the housing for all, as Dr. Hiranandani said, was supposed to be trying to strive for a very high ratio of ownership, like we do see in some countries, but it's not really viable or feasible in a diversified country like India and a developing country like ours. So this the rental housing concept, which was very much needed and coming about on all dimensions, which is both on the land and infrastructure side, as well as on the physical incentive side, and then finally to get a model tenancy bill, which was the need and the crying need of the hour, I think would be a great, great impetus and a catalyst for really providing some sort of a roof on everyone's head. What most of us don't realize is actually the figures we have for India are pretty diffused, because you can have surveys which say that our home ownership is just 50 to 60%, and some surveys which pitch our home ownership even much higher at 70 to 80%. But the fact is, I don't think we should really strive for home ownership, because the new generation, the millennials and the Gen Z, they seem to be more going on the experience side. And
That's right.
post-COVID, if you look at it, people are not really in a hurry to be always close to their place of work and have to own that house. They don't mind being further away or moving around. And for that, I think you need to bring in this whole concept of home ownership and home usage as being different. They need not always have to converge into one person. So I think now we are really realizing you have a developer, you might have an operator, you will have a homeowner, and finally you will have a home user. And all four can be the four legs on which this whole table can stand, of trying to put a roof on everyone's head. And the weakest sections, which is where we are looking at, whether it's the EWS, LIG, they are the ones who really need that home, because even in a city like Mumbai, we all agree that half our population live in not pakka houses. They're also kacha, they're all in shanties. So this is where I think this is going to really transform our whole industry and our whole objective of providing housing for all. Thank you.
Yeah, thank you. I really feel it does require the perspective shift from home ownership that will really give impetus to the rental housing market. And but clearly we do need to see what we need to be providing in the EWS and LIG segments. I'm going to bring you back after this round. I'm going to bring in Rajesh Krishnan here, who has been working in the affordable housing sector and trying to provide affordable housing to the low income group. So what is your take on now this perspective shift onto not owning but to renting, and the policy environment that is being created to support this?
Thanks a lot, Lara. I mean, are you able to hear me well?
Yes, very well. Please go ahead.
Excellent. Yeah, it's a pleasure to be here. Thanks a lot for the invitation. See, I guess the starting premise is the rental yield in India is 2%. What does this mean? Essentially, it's much cheaper to rent than to own a house, because mortgage rates are 8-10%, and economically it makes more sense to rent. So in that case, why are people buying homes? It's an emotional purchase, and also investors traditionally have been betting on property price appreciation, and hence there is a deep market for home buyers in the country. Yeah. So coming back to the question that you've raised on the rental housing policy, I mean, clearly the need for rental housing is very clear. But what I would like to kind of highlight here is essentially we got to look at the economic strata. If you're looking at the middle income and above, I think market-based solutions are very viable, right? You got a lot of locked up homes, and so long as you have the right regulatory framework between landlords and tenants, and with increasing a number of rental service providers who are able to find tenants and collect the rents and service these apartments. Essentially, I'm saying the middle income and above segments will be well served, if not they're already served. But then the key challenge, as you pointed out, is shortage of housing in the EWS LIG segment. And that is the real elephant in the room.
Yes.
Essentially, you've got migrant workers coming and sleeping on the streets and living in slums, and essentially these guys can afford 5,000 rupees a month, perhaps. Now the question is, what can you do for them? And there I'm saying, look, especially in a city like Mumbai, where land prices are exorbitant, it is not economically viable, even with all the incentives that are being talked about, to provide rental housing solution in the middle of Mumbai, unless we can make lands available pretty much for free, which I believe is on the cards. Essentially, turns out a lot of the lands are locked up with defunct PSUs, charitable institutions. The railway is a large landowner in city-centric locations. So I guess what is being discussed here is essentially, can we get these lands made available for rental housing? So the pitch to, let's say, a charitable institution which has this land is as follows, saying, hey, you have no use for this land, you don't have money to develop it, you can't sell it as per your norms. So hey, why don't you lease me this land for 25, 30 years? I will spend my money, construct, create rental housing stock, create cash flows, return money to my investors, and after 30 years, the land and building is yours with established cash flows. It's a BOT model. And that can totally work and can be done in scale. I can see a lot of players who can fund the construction, construct, and deliver. But then I guess the question is, if you have to make it available at 5,000 rupees a night, even assuming 200 square feet home, essentially you can barely fund construction. Essentially what this means is the landlord is not going to get market yield for his land. So the land has to be made available at a deeply subsidized rate for this to work, which is what I guess the government is considering.
Right. Thanks, Rajesh, for really pointing out the fact that you seem to see the land as the critical hindrance over here. The model, the ARHC scheme does offer two models, which is one where the builders use their own land and the other where the vacant housing is converted into the ARHC complexes and those are rented out. And I'm sure that Mr. S.J. Vijay will be able to throw more light upon what the scheme has in terms of incentives and concessions that can draw the private sector. And I'm going to come back to you, Rajesh, with the comparative between the SRA and the rental, and then we'll have a chat there. But can I bring in S.J. Vijay here to really talk about the incentives of the policy and to address the issue of land and decent returns to the private sector?
Lara, thanks. And most of them are familiar faces there. In fact, I have interacted with Vishal. Rajesh is a good old friend. Balaji and I have run into each other when I was young. So going into, you hit upon land, you hit upon incentives, and Rajan in his introduction said, let's figure during the panel discussion on this lab, what's the target group? What's going to be the possible ROI? What is the subsidy going to do as far as augmenting the ROI to at least a viability level? This is the broad context, I have been jotting down a few things. So let's take the typical consultant framework. I think Vishal will be happy. Consultant framework is, what is it that this affordable rental housing complex scheme is trying to deliver? Bring in the land, either from public sector or from private sector or from industrial estate or from railway, like Rajesh was saying, or from charitable institutions. Try and pull the land, which is the critical resource, from as many sources as possible. And when it comes to buildings, as almost all of us are aware, they said constructing building as the way we have been constructing is time consuming, wasteful, inefficient, So they said, okay, here is the 600 crores, which I am putting aside and saying anybody who goes to, manufacture the built environment, hey, come here, I will give you 10% of the construction cost approximately as a grant, as a subsidy, which you don't have to pay. In fact, they quantified, if it is affordable rental housing complex scheme, 20,000 rupees per bed is available as grant if you are using manufacturing-based construction technology. So how do we put it into context? So government in its policy has taken this into 4 buckets: incentives, like we discussed, Lara, where the government is taking money out of its pocket and putting on the table. Second is the exemptions. Hey, you got to pay income tax, I will exempt. You got to pay GST, I'll exempt. Hey, you got to pay charges for land use conversion, I shall exempt. You need to pay money for additional FSI, I shall exempt. So category 1 was incentive where the government is putting money on table from its own coffers. Second is what we ought to have paid, they're saying don't pay because it is for this purpose. Third one is concessions. Concessions, those of us who have delved into the policy know the utility rates are at residential rate. The property tax is at residential rate. So they are not treating us as a commercial venture and they're giving us those concessions. Third was the privilege. The privilege is when you are operating the affordable rental housing complex.
Yeah, he's back. All right, we've just missed you for about a few seconds.
Oh, I'm sorry. Where could you, up to
yeah,
what?
just please continue.
Yeah. So we talked about, just to recapitulate, we talked about incentives, exemptions, concessions, and privileges. And those were the 4 buckets into which the policy tried to do whatever it can, one from. It is a central scheme. It is not a centrally sponsored scheme. Big difference between a central scheme and a centrally sponsored scheme as far as the budgetary allocations and funding is concerned. And that is why whether it was a technology investment, technology innovation grant, or the income tax exemption or the GST exemption, most of the money is coming from the central government coffers. Yeah, 1. 2, let's go back and into the framework of saying, what is the target group? Right now, it is saying LIG, EWS. EWS, as per definition, is 25,000 rupees per month income. LIG is 50,000 rupees per month income. When it says income, it says family income, but also says students. It also says people who are traveling for a purpose into the urban areas. So, like Dr. Hiranandani was saying, we need to look at the fine print to see whether this 25,000 rupees per month or 50,000 rupees per month is going to be the individual's income in the new location, urban location he is going to be living, or is it going to be aggregating all the incomes of the family as a whole. There is a kind of a clarification that is being sought that will define our target group. We still don't have clarity. Right now, we are going by the definition of family income. So what we can do, as we discuss, is put the land, the building, occupancy, and operations, what is provided for in the policy, and also look at which is the target group as we go ahead in the panel. I just thought I'll throw the framework, and then we probably will use the framework to keep on dissecting and seeing whether we get some insights. Thank you, Lara.
Right. Thank you, Vijay sir. That's really helpful. I mean, you have put the policy for us as a framework, and I do believe the other panelists will also try and kind of pick on the other points that are presenting as a roadblock for the private sector to really look at this as developing a viable model to coming in. I'm going to be asking Mr. Dhyan Beliappa to who comes from over a decade of experience on shared accommodation with the Arusha homes, his own experience of working with governments for the LIG segment in housing. So your thoughts on this new rental housing policy and how more ventures like Arusha can kind of work at different segments of RHC and cater to the different segments of society and perhaps go lower down in the bottom towards the bottom of the pyramid.
Okay, thanks, Lara. Good evening, everybody. So as Lara said, Arusha Homes, we've been in this space of providing shared accommodation for singles primarily, not families, across income groups since I think 2008. So that makes it about 13 years of operations that we've been doing this. And therefore, I would like to share some of our experience that we have had dealing with some of the bottlenecks or the roadblocks that I think Mr. Vijay also mentioned, okay, which primarily has to do, the key thing, at least in this segment, which is the LIG EWS segment, is that the ability to pay is very low, which we all know. And therefore, for any operator, especially when it comes to the singles, I'm sure it is the same holds good for the families as well. The margins are very thin. So the only thing that will make it viable or worthwhile for an agency or an operator would be scale. And given that, we would have to actually look at what are the bottlenecks that one needs to address. So just to recap, a couple of years back, we tried this experiment at Chakan, where we worked with the industrial workers, and we tried it for about a year. And the key thing, of course, was, the entry level. I mean, the people who move in from the rural areas, as Dr. Hiranandani mentioned, that it's, people come from certain areas and move into certain, 4 or 5 different areas across India. And most of them are not families. The families come in much later. Primarily, it is the individuals who move, they get a job, and then they send money back home. And as a result, their ability to pay towards housing is very limited. And they're extremely value conscious. We've tried working with security guards for the organization called G4S. That was much earlier. Chakan was, I think, 4 years back. But what we would also like to bring to this discussion is, you see, we also operate at a white collar, entry level, white collar level, shade accommodation for maybe entry level tech techies or even students for that matter. And what we find is that over time, compared to when we started, there is now an asset class being created. Private individual landowners building to cater to this segment because they see higher returns from this segment as opposed to renting it out to, say, families. Okay. Now, we don't see that having happened at this segment as such till now. But given the right incentive, given what the current policy is promoting, maybe it will take a couple of years, and then you are able to create the ecosystem that will enable other operators to come in, because we operate on a rental model. We do not own the properties, and therefore rent, which is a function of the land value, is our biggest cost. So how does one, going back to Mr. Rajesh Krishnan's comment about land being critical, so for us it would be rent, which would be the contributing factor about how one would make it affordable. And therefore, what does this policy talk about, how it, you're addressing this particular issue? The other thing I'd like to mention is also the scale. Like we feel that at least our initial indicators are that the market size for single, people in the larger metropolitan cities and, some of even the tier 2 or tier 3 cities is upwards of 10 million. Now, how do you bring that into this whole thing of where we feel that the focus is more towards families? And it's creditable that for the first time, the government of India has actually spoken about an affordable rental policy. In fact, I'm standing in for Satya today, my colleague, who's also the CEO of Arusha, who was part of the first task force on rental housing, which was chaired by, I think, Jerry Rao. And we brought in that thing of, a hostel into an affordable rental, the discussion point. Because before that, I don't think nobody ever spoke about hostels as a viable model to cater to rental housing. Okay, so having said that, I would like to add one last thing, that one of the other things that we have, and which I think Mr. Hiranandani also pointed out, even though the policy does talk about financing, whether the banks will lend or not lend is another key issue, and funding is extremely critical for this. So how does one address that not just through equity, but also through debt, you know. And going forward, as I said, if that some of these incentives can also be allocated even to existing operators, not just the people who come in now. I think that would be important. Yeah, thank you.
Thank you, Dhyan, and that's nice of you to really direct me to my next speaker. And I'm going to come back to you about the challenges of running the migrant worker housing in Chakan in Pune. But before that, I want to bring in Vishal Goyal to really answer what Dhyan has put on the table for us as to finding finance for this in the implementation of this policy. Your views, Vishal.
Thank you. Great to be on this panel. I'm, I think, least qualified to be on this panel, but I'll try to make some notes here. First of all, I think, till now we see this entire problem of rented housing as a B2C problem, where we are working with the end customer and we want to work with the end customer who is the resident. I think the way we look at it is, why not think of it as a B2B problem? And work with the businesses who need the migrant workers, work with those institutions who now understand that labor cannot be taken for granted, and the disruption of labor can really disrupt their businesses in a very bad way. And I think that is what we are trying to do. So when we look at it from our perspective, we believe that unless the business and the government policy incorporates the business into this rented accommodation, we will only be having either a sort of a subsidy for low cost housing, and it will actually, then has to be rented out by a sort of a owner who is incentivized by the increasing price of the housing. It will be very difficult to create a pure play, purpose built, accommodation at a low price of rent. So I think I will request you to look at it from a sort of a B2B perspective. We are engaging with multiple companies in India on a B2B perspective, especially large employers in apparel industry, large employers in the engineering industry, who are looking at people more than 500 to 1,000 people. They are mission critical. COVID has exposed us all about villages not allowing us to let people step out to work and produce essentials like pharmaceuticals, vaccine. And I think it is very critical that we start looking at this entire perspective from a B2B perspective. Now, what could be solutions? As you know, we do have a Contract Labor Act. Every employer has to show that he has, when he has to take a Contract Labor Regulation Act, he has to take a sort of a certificate from the government that he is going to take care of the employees. These are the employees on the site, and he's almost like a principal employer, although they are contract employees. Can we look at a systematic phase-wise approach over the next 5 years, where the Contract Labor Regulation Act has to show availability and access and contractual access to rented housing? And unless he is able to show that within a vicinity, he will not be allowed to deploy those workers on the site. And like we had the Factories Act and the Contract Labor Act, we can actually allow some of the, I know it is very abused these days. Wherever there's a problem, we run to the CSR money. But even if a employer is using its own CSR money to create affordable rented accommodation along with a contractor, that is one part of the way we at Celestra is looking at this problem. We are working with a large employer in Vizag who is into apparels to create such 5,000 people. Second part of it, which is equally important, as soon as the employer takes the responsibility of such housing, or he gets involved in it, and one of the reasons why they have not got involved in it is the responsibility of hygiene, safety, and ability to pass the examination pass the sort of an audit of their end customers, be it a Foxconn, be it a Brandex, be it a Victoria's Secret. All of them would then like to see what type of labor welfare is in place, and whether they are living in safe, hygienic premises. So I think, I keep quoting this, don't get me wrong, but, in the US, most of the jails are owned by, or what they call as correction centers are owned by private companies. And government, leases it and pays a sort of a fee per prisoner or per person who is in the correction center. When we design these facilities, knowing the type of people who will be living in these for the first time in organized homes, getting staff to keep the toilets clean, to keep the place livable, will be extremely challenging. So there also needs to be a lot of work to be done on the design, which gives the privacy to a worker for staying long term. The Dubai model or the Singapore model, where there were international migrant workers, may not work post-COVID. We have to relook at the design parameters. We also need to really look at a operational company or a framework for the blue-collar workers, people who are earning less than 20,000 rupees. And there are lots of people who are earning less than 20,000 rupees. So I think that is where I would say the challenges between creating and operating. There have to be two different bodies, one who creates and one who operates, and creates a long-term B2B model of purpose-built rented accommodation. And then obviously my last remark would be on clarity from the government on incentive. I think, whatever I read from the policy, there are a lot of if and buts. Is it a residential accommodation or is it a commercial accommodation? So if you're doing a dorm, do I have to pay GST on the rent? Because I'm not collecting it directly from the end user, which is exempted. So if I'm collecting it from the end user, there's no GST. But if I'm collecting from the company, there is a GST because that company is renting those services and things like that. So there's a lot of clarity which can be brought into that, and there could be a lot of frameworks which can be created around it. And we will be very keen as a participant of creating almost 50,000 beds in this ecosystem, where we bring in the capital and where we support the blue collar workers for large industrial groups. And I think some of the places where we can make a start, the land is not very expensive. We are still looking at almost just a 200 rupees per square feet FSI cost, even if we don't go tall and we build only 50,000 per acre. But the operational cost, the GST impact on operational cost, and some of those elements need to be visited. And the policy should cover B2B, because currently policy is completely quiet about a B2B arrangement.
Thank you, Vishal. I mean, you've really brought out a lot of points for us. One, policy advocacy, and for us to kind of really look at how other policies can support the implementation of rental housing. And you have brought out the question of operations and maintenance, and we have Uday Lakkar with us, who's run a Coho Living for now a decade. So I think he can really share about his experience on running shared accommodation, and also maybe if he can talk about the aspect of affordability of rent for different segments. Thank you.
Thanks, Lara. Good evening, everyone. Again, just like Vishal said, I'm probably quite ill-equipped to comment, but yeah, I'll try to share a perspective which has not been covered as much. I guess we have covered the majors out here in terms of government subsidy, in terms of requirement for land, in terms of tax exemptions, and many other aspects, right? Ambiguity in terms of regulations which are there in most laws which are enacted quite impromptu in our country. Right. So I'll try to cover a few other dimensions probably so that I can add my 2 cents to the discussion here. One of the thoughts, so it's been half a decade, Lara, that we have been building this, not 1 decade, just a correction here. So Diane is far more experienced than me, right? So my experience is just half a decade, and in that half a decade experience, I've had a variety of audience to touch base with, whether it's the students or nurses for whom we have been building accommodation, some experimentation with industrial housing, besides young professionals, whether it is IT professionals or otherwise, right? So, few of the thoughts that I'll just put to the table out here is, very interestingly, the lifestyle requirements of people in a certain age bracket are fairly similar. For instance, somebody who is earning say 15,000 rupees, a nurse, or say an industrial housing person, or somebody who is an office boy or a housekeeper, and somebody who's working in an IT company, it's not very different. For example, everybody wants to own a smartphone for sure, right? Something which is, just to give an analogy out here, somebody who earns 15,000, we should not rule out the fact that that person will not be having a phone which is more than 7,000. It is very, very often seen out here, right? So the requirement for Wi-Fi that we get even in the MIG category or LIG category is very high. So similarly for food requirement, we might assume in our head that that based on the income strata, people might prefer a certain kind of food or otherwise. And in reality, at least on ground, I've been quite surprised that the requirements are more age-centric as compared to what do you say, income-centric, right? So that's one of the thoughts, right, that I would want to bring to the table here, particularly when people migrate to tier 1 cities or tier 1.5 to tier 2 cities and all. Then that requirement changes, at least in terms of the mind space. Second thing is, of course, government land is always a good idea, right, to help support the thing. So out here, I heard two different thoughts. One from Vishal, who talked about lower FSI cost of 200 rupees square feet, and one from Rajesh, I think, when he mentioned about that charitable institutions and government, railways, and so many people owning lands and how that can be unlocked for building something like that. Now, a thought as a professional, I always come across is land is a state subject in India, and a lot of this policy documentation or policy initiatives are central government initiatives and all. So anything that we think about, so I think Dr. Hirandani mentioned in the beginning that depending upon which government is having how much influence in the states and all, the policy implementation tends to change, right? So out here, that's one of the factors that we have found as an operator who's in North India, South India, West India and all, that it tends to vary drastically. So that's another thing that we have noted quite often, right? That difference between state government and central government as far as land is concerned. And which brings me to an ancillary point is that why do people migrate, right? Even in the LIG, MIG category, why do people migrate to tier 1 or tier 2 cities? So migration need not necessarily be always in the heart of the city, right? For example, we have something in Chennai, in Uragadam, right, which is an industrial hub. I think Vishal mentioned about something in Vizag where it's about textiles and all that, right? So it's a variety of things. We do nurses accommodation, which is in the eastern part of Delhi, in just abutting Ghaziabad in North India. Right? So something might be in Sonipat and something might be in different parts, right? So migration can happen for a variety of reasons. It could be students who require such accommodation and all, very similar framework applicable to them. Dormitories, as we are calling the words, or hostels, like Diane mentioned, I think, right? Or industrial housing in case of, say, large industrial houses. Now we are doing something in Haridwar out there. So the catchment comes from industrial housing out there and all that. And the land cost is not really a challenge, or land is not really a challenge, right? So depending upon which pocket of migrant are you addressing, that becomes challenge. So that's a thought again to put it. So Vishal mentioned about B2B. Another corollary to that point I would like to add here is, based on my experience in the last half a decade, is most of the organizations today do not want to provide accommodation on their own. They are more than happy to provide cash or money and let people find their own accommodation, surprisingly. And when I delved more into it, why is it so? Largely the psychology came from the fact that I don't want to take up liability for the person, right? If something goes amiss or something goes wrong, who takes the liability? So that's when probably a lot of these operators like Coho itself and Arusha for that matter, or many others across the country, right? So I guess that role comes in wherein the person or the entity is okay to pay the money. For example, with IIT Delhi, we have a contract wherein IIT pays a subsidy. With Max Healthcare, there's a contract where Max pays that, right? So people are okay shelling out the money in many cases, whether it's government or whether it's private, but sometimes they're not okay taking the liability of operations, right? So I guess, which brings me to a policy initiative point out here is that, one, when we talk about affordable housing or rental act and all, I guess operations as a thought gets a bit of a back burner. We often talk about just taxation or what you say, FSI or construction benefits, etc., which is great, which is obviously the stepping stone on which something is built and everything. I guess there needs to be more clarity and some help in terms of operations, because when I mentioned about lifestyle being similar, so it's not very different when I'm catering to an IT employee at an entry level 22-year-old versus a person who is a security guard out here. The salary bracket might not be very different. It might be just different of $5,000 in their take homes, right? Frankly, right? And the lifestyle requirement is same. So I guess on the operational front, again, some policy initiatives can be very, very helpful, because once the things are constructed, right, then on an ongoing basis for the next 20 years, it's operations for you, right? So that's one thought that I would like to put on the table. And second was also the fact that we should look at it in a fragmented manner also. Quite often, the land pockets are diversified. For example, when I look at Gurgaon or even Bangalore for that matter, quite often land pockets are there because, say, a sector was allotted for township or for a particular use case, institutional land purpose, and say maybe there's a half an acre land parcel which is lying there, which is just vacant, right? I guess we should not be refraining from taking the approach of small pockets, which could be very highly accessible and all. Because remember, this EWS category, all the residential accommodation or townships which were created, everybody had a provision of EWS. It is just that it was never executed in the right manner, and people keep selling that and all. And there are different people who are staying. And to these rich people, those who are actually serving, whether it's the maids or guards or cooks or drivers and everything, they finally don't have accommodation to stay there, and they end up staying in shanties, right? So there has to be use cases which are defined and in nearby pockets out there, and the land is available. I see that day in, day out in front of me, and it has to be addressed at the state level also. So these were some of the
Thank you.
that came to my head.
Yeah. Thanks, Uday.
Can I just, Lara, just make one small point here before, I'm sorry, saying most of the corporates are spending anywhere between 3,000 to 5,000 rupees in transporting their employees to the homes which they have chosen. And most of them spend 30 to 40 minutes in the buses. And I at least can bet that there is almost 1 million such workers who are being transported at the cost of 3,000 to 5,000 rupees in buses to places which are like semi-slums, instead of the same money going to build a sort of a cyclable distance, affordable rented housing.
Yeah, thanks, Vishal. I mean, I really feel then that's the point of urban planning, and we are only going to be looking at that in places which are looking at new master plans, and I'm sure that all urban planners are listening on how we can reduce commuting time and cost. This conversation is a lot about the middle income group. I'm going to drive us back to really why the ARHC scheme came about, to Mr. Balaji, who really has spoken about the use of vacant stock, and how one can look at new townships and what needs to be done to bring in the different stakeholders to make different townships happen, viable townships to happen, to really take care of the migrant population that comes into cities to work.
Yeah, excellent question, Lara, because I believe the policy should look at each of these stakeholders and figure out what are the policy initiatives they can give or the incentives. Like, for example, if you start with the land and the infrastructure, we all believe, given that it is going to the weaker sections, the land has to be subsidized or given on a BOT on a free basis. We believe that the government has to provide for infrastructure to these places so that the developer is not taxed by doing that. So that has to be separated and looked at as a separate bucket. Then for a developer, we need the single window clearances, the additional FSI or FAR that is needed, waiver of charges for, as somebody mentioned, of the CLU, change in land use. So you will need to have a separate chapter and a separate focus on how we need to develop these places as townships. Then you come to the financing part of it, which as the policy, in the policy document so far, I've seen it has skimmed around, but not really addressed it. And believe me, unless we can figure out the viable option, I think nothing works out here. So whether we look at people having to give money for these projects on a priority sector lending, or whether equity, in my opinion, what I propose is that the equity should come in through what I would call creation of an impact fund. Because if you create an impact fund and you bring it with some sort of a fiscal incentives of maybe a pass-through tax status naturally, but more importantly, a tax exemption status, then we can even lower the expected returns the equity holders might have when they try to finance such projects. So we can create an impact fund which is large enough, just like the government sponsored or pushed forward the Swami Fund for the stressed projects. So you can have a sort of an impact fund out here, which will really help in creating the equity base to create such townships or such complexes for affordable rental housing. So financing needs to be addressed along with its fiscal overtones in its own separate, focused manner. And then finally, we look at the operators, what they need in order to ensure the clarity, as somebody was saying, as to whether it's commercial or residential, or whether you have the applicability of GST or TDS. All these sort of things can be sorted out for the operator. And then only, I think, when we look at all this, does the user come in? And I would assume the model becomes viable, financially viable. And the way it is looking, as we find the rentals are creeping up, especially when it is serviced real estate and people have thrown in some sort of services along with just the bare bones. So I of 2 to 3%, we do look at rentals today, which are creeping up to 4 to 6%, and maybe even go up higher based on the context. So with rentals creeping up, with mortgage loans coming down, I think it's becoming a viable situation where you can have impact funds created to give equity for it. You can get loans from banks on a priority sector lending basis and create this sort of a thing actually happen, make it practical and make it implementable. But I think there are a lot of stakeholders, from the government to the financial institutions, to the developers, to the operators, and we all have to come on to a panel and we all have to come on to a forum to discuss this thoroughly and figure out as to how do you make this actually roll out on the ground. So it is interesting, and I think this is a good start, but I think we need to slowly deep dive in separate workshops for each of these verticals and look very
No, absolutely. Thank you, Mr. Rao, for really putting it positively, constructively, and of course, we have a lot of to take forward to. And the model that you're talking about, I saw Rajesh smiling, so maybe I bring him and see if there is enough political will to make this happen.
Thanks, Lara. A couple of things before I start on political will to add to Balaji's point. Funding is a problem for affordable housing. The whole sector is capital starved. For what it is worth, some 4 years back, affordable housing was declared infrastructure status. But then essentially RBI never sent a note to banks instructing them how to deal with affordable housing differently. And as a result, it did not move the needle at all. For what it is worth, there is a provision under which project loan to affordable housing projects could be treated as PSL. As far as I know, not a single project in the country qualifies the stringent conditions they have. Of course, home loans to affordable housing buyers is PSL, but then project loans were never qualified. So as a result, I'm saying project funding for affordable housing sector per se, it remains a challenge. So if you're serious about implementing affordable housing in scale, we need to solve the affordable housing and the funding challenge. Perhaps we can take some leave from the US, where they use LIHTC bonds. Sorry, do you hear me?
Yes,
Lara?
go ahead. Yes, yes.
Okay. See, the US has this thing called LIHTC bonds, which is low income housing tax credit bonds, where investors in these projects get full tax break upfront for the investment they've made. And that is the way they were able to fund the construction of millions of rental homes in the US. We can pretty much copy the same idea here in India. That would be one way to make funding available for rental housing. And coming back to political will, for what it is worth, Lara, I was talking to you earlier. We were part of the consortium that bid for the redevelopment of Dharavi. And one of the key points that we made there is a pressing need for rental housing to solve the Dharavi problem. Essentially, the challenge is as follows. So in a typical SRA, the people who stay in the ground floor are deemed to be homeowners and they get a free home. Whereas in a place like Dharavi, you got people living in the first floor, second floor, third floor. These are all kacha structures. And these are typically rented by the guy who owns the ground floor. And they're paying 5,000 rupees a month rent. In a typical SRA, the developer will go and just pay them a few thousand rupees and ask the renters to just go and find some other place to squat. Whereas when you're talking about a project like Dharavi, you're talking 500,000 people. And even if you were to pay them physically, there is no place for them to go and squat. So if you're serious about solving a problem in that scale, we said, hey, we need to construct 100,000 rental homes within Bombay Island. So we basically said, hey, you have salt pan lands here where you're not, and can we use that for solving this rental housing problem? Wherein we said, government, you own the land, you remain the owner of the land, but then allow us to construct rental stock to solve this Dharavi problem.
Right.
But then to cut a long story short, we didn't find the political will to do so.
Right. I think, we will have to discuss the pros and cons of the previous policies to deal with how the need of housing in the affordable section, and your experience can be brought up again. But the issue you're clearly talking about is the use of unused land, and that is really critical to this rental housing policy. I will want to bring in S.J. Vijay, who is very positive about the policy, and if he can answer some of the questions that and the points that Balaji Rao and Rajesh Krishnan have raised. S.J. Vijay.
Yeah, Lara, and I share the pain with Rajesh because, like he said 4 years back, I was also jubilant and celebrating when they said it is affordable housing projects will be funded under the priority sector lending category. It is not a happy situation that it did not get funded to the extent it should have been, or like Rajesh says, none of them got funded. That is a fact. And today, if you look at affordable rental housing complex scheme, we are talking about, Balaji will probably agree or he will give clarification. As ex-bankers, we know there is one class of asset which probably has the least of the risk. That is real estate, building, land and building, either owned or as an asset class together, probably holds among the lowest of the risk factors. If we take that into account and say, okay, can we do the project financing under whatever the government of India said, all of us have read through the policy. Government of India said this will be funded for a period of 20 years. Affordable rental housing complex project will be funded on a door-to-door tenure of 20 years. And that too, at a rate of 7 to 8%. That is the intent. Now, in India, we can always debate whether the intent will be executed. Let us for a minute agree or wish, hope that it will be executed. If that is the case, we are talking about X amount of advantage we get as a developer, number one. Number two, if we are talking about, Vishal raised a brilliant point. He said, hey, listen, you have said GST exempted. GST from who to who is exempted? Yeah. And I am coming in as a corporate entity, B2B, will I have the exemption? Vishal, this may not really comfort you, but I just will share this. In the same country, to develop something called a policy and turn it into act, we spent 7 years. And to destroy it, people took only about 4 or 5 years. The government is not only government at fault, the people can destroy anything that you create very, very rapidly. Hence, there is a very fine walk we have to do. And I think as far as enabling the affordable rental housing to the extent one hears, if I believe, I think the financing will be available. Then Uday came in and said, hey, all this is great. There is n number of land parcels lying around where I am sitting. Why can't I put it into use? Why do we keep crying about this parcel of land versus that parcel of land? If any of you had an opportunity to find the English translation of the Gujarat Affordable Rental Housing Complex Policy, you would be very happy to note to what level of detail they have gone into. In fact, and for Vishal and Uday who are already in this area, the government of Gujarat is very keen that they are wanting to give you the land next to or in the industrial estates to be developed exclusively as industrial housing, and have the other state governments also come in and done. I haven't seen the released one, but I keep hearing we will kind of emulate, they didn't say copy, emulate the central and the Gujarat affordable rental housing complex policy. That was as far as the availability of land for operators. The intent at the ministry level, I was not involved in drafting, but I did have a kitchen view when it was being cooked, is to have an operator, whether it is for the existing government housing stock to be put into affordable rental housing, as well as the new one. My industrial clients, Uday was absolutely right, Vishal, you were also right. They said, except the construction companies who have the labor at site, everybody else says, I will give the land. You bring in a developer, more than developer, I want an operator, because I do not want to get into the liabilities of operating it and facing the consequences.
Right.
I kept thinking that, an entity like Habitat for Humanity, or an entity which really wants to do this as a kind of a meaningful, tangible service, can become an operator, or if it makes economic sense, maybe Uday, maybe Vishal, maybe Balaji. Sorry, maybe not Balaji, maybe, the gentleman, the other gentleman who was running the houses.
Dhyan.
Yeah, Dhyan. Dhyan Beliappa. He can. So, and when it came to the next question, I was, in love with what Vishal said. Hey, when you take a labor from the contract labor provider, you have insisted, show me the PF registration. It is not too far to demand. Maybe that is an action item we should take to government, Dara. Say, show me the access he has for the affordable rental housing, which is as per the norms or standards. Yeah?
Yes.
And another point which I noted down in the discussion was, someone was saying, I think Mr. Beliappa was saying, hey, how do I provide affordable rental housing for the industrial worker? There is an interesting case study in Bangalore. I'm sure people here in the panel would already know about it. A guy who went and took all the floors which are built but not sold, put some money, made it usable, and he is giving it to the chowkidars, the security guards, and et al. At a very simple pricing pattern of 50 rupees per night.
Right. Thank you, Mr. Vijay. I mean, very, very important points brought up there. And since you have spoken about Mr. Dhyan Beliappa, I'd like him to come in again and really share his experience of how his worker housing did not, the challenges that it faced in Chakan, in Pune, and that he kind of put into context as to why he asked that question.
Okay, my apologies. There's some problem with my mic, so I'm not able to hear what you've been saying, but I will just connect back to some of the points that were raised, and I think Mr. Vijay also raised them, so did Vishal, and even I think Rajesh, about working with the organization and the challenges of working with the organization. I think Uday also mentioned that many organizations do not want to take that liability. They do not want the pain of having to deal with complaints coming on a regular basis, because we face that not so much with the organizations, but when we did this work with the skill development program of the government of Andhra, that was I think in 2009, and where the trainees would then do a month's on-the-job training which was also being funded by the program, and we provided accommodation for them in either Hyderabad or Bangalore. And it became a big thing because there were issues about food, there were issues about, and food, I'm sure Uday will agree with me, is a hot, after Wi-Fi, the maximum complaints come about food, right? So irrespective of which sector or which segment of income you're catering to, food, and especially when you have such a diverse population, you have people from Kashmir, without exaggeration, Gujarat to Assam, everybody, and food habits are different. So there's a huge challenges, and most organizations do not want to get into that. They would much rather, as I think Uday mentioned that give the money and say, you fend for yourself. And the challenges for us, especially when you're dealing with that segment for the operator, is one, as I said, the margins are very low. Two, the risk of this person just walking off. The employee quitting his job and then he just disappears. So then whether you take your rent in advance or you take it, because most of them do not even pay advances, whereas in the slightly higher priced bracket, you can claim advances. But here, even that advance, that luxury is not there because that person lands up from his village with nothing. So, and it is also subject to the vagaries of hiring. One of the things why Chakan didn't work out for us is hiring dropped that particular year by almost 75%. So the first 2 months we did reasonably well, and we thought we had the model, and then we kind of scaled up, only to find that suddenly there was almost like a freeze. And even our first project in Chennai, which was I think in 2008, was again for industrial workers, price point of 600. That we did without food, and then we found that without food this model doesn't work. So it has to be a full service operation when you're doing it for singles, but the challenges are multiple. You have say a hiring freeze. Suddenly you are stuck because it's only the new employees who kind of come into an organized space. It's very unlikely that somebody who's already moved into an accommodation shared with 3 or 4 people with what they perceive as higher levels of freedom will suddenly move back into this, however good your service may be. You see? So those are challenges which, sometimes the organizers, so who do you look for backing? Just like you have, say, the, you look at support from the government, but you would also need something viable happening here as support from the organization. And, and memories are short. Like for now, yes, they will feel the need, and maybe for the next 6 months to a year, then the organization will say, okay, I need to support this. But how many of those organizations will continue that support?
Right. Thank you, Mr. Dhyan. I'm
Yeah?
running short of time.
Okay, I hope I answered that question, Lara, because I'm
yes.
terribly sorry, but there's something happened to my system and I'm not able to hear very, clearly.
No, I am. Thank you so much. I think you kind of also responded to the other speakers. I just want to ask Anandita, my colleague, to put forth 1 or 2 questions to the panel, critical questions. So I think we have time for 2-3 questions. Yeah.
Yeah, I'll do quickly. We have Dr. Suresh Chandra Dalai, who is the Mission Director for the Orissa Urban Housing Mission. Sir, are you still there? You want to ask your question directly to the panel? Sir, you are on mute. Okay, let me ask on his behalf. He had written it quite some time back on the chat. So one of the questions that Dr. Dalai was asking is that what do you think the applicability, a state like Orissa, which has very low urbanization and but significant renting going on in city specific. He's saying in Model 2 ARHC in India, whether it's viable in small city or towns, because the migrant workers may not be able to afford the rent fixed by the private entity. So anyone who would like to take that?
I can attempt to answer this because I have done this extensively in Vizag and about 50 kilometers away from Vizag,
Sure.
which is almost like out of nowhere. Mostly fishermen and all of those people live there. The two things I just want to also comment on. One more thing before I go on to the answer. One is we have done this very unique concept of partnering with Akshay Patra, where we have created this kitchen with Akshay Patra, and they provide meals to all our 22,000 women who work in the Brandix factory, and that has really worked us very well. So I think that is something a service provider who is looking at massive numbers can look at it, because they do a fabulous job of automation. Coming back to this, so if you are at the outskirts and where the land cost is very low, and also the existing inventory is very low, it actually helps, because with the low existing inventory, suddenly when there is a large manufacturing or a large industrial product which comes up, you would see the rentals per square feet maybe higher than some of the Bombay suburbs. And also there is not enough capital or enough ways and means like water, electricity and all for the competition in terms of unorganized sector to come over the period of 3, 4, 5 years. It does catch up, but it takes time. So in those areas, these type of purpose-built housing really helps, because in the night there are power cuts, there is no social ecosystem. People seek security much more than what they seek in an urban area. And plus, when there is some sort of challenges in terms of heavy rains or you get cut off, these massive community living helps. So I think this, it will be sort of a reverse model here, where this affordable house accommodation will actually start picking up in remote or small industrial towns rather than established clusters, because availability of land will be less. And I see large clusters coming up in Sri City, coming up in Tirupur, coming up in some of those areas where the land price is low and the numbers are very, very high. So I'm very positive about states like Odisha, states like Andhra, where we have this large manufacturing industry coming up. Gujarat is a very good example, where cities like Dholera and all may get a lot of organized living centers.
Thanks, Vishal. That was very useful. There's one more question here which says, is there a possibility of using zoning instruments to create FARs and integrate this lack of land in cities with the spatial planning regime so that more land is released for affordable rental housing? Anyone would like to take that?
I think it is already provided for. If you see the Gujarat affordable housing policy document, affordable rental housing complex policy document, it categorically says how much is the additional FSI free of cost, and land typology wise. Agricultural land also they have included, industrial land, residential land category 1, 2, and commercial land. They have given for each category what is the current FSI, what is the additional free of cost FSI. Again, it is a document. Now, whether it is already being implemented, that is, like Rajesh calls it elephant in the room. Yes, it is an elephant in the room. But it is on paper available. Yes, the answer is yes, it is being used to incentivize.
Thanks. Thank you, Vijay. Dhyan, I'll end this question with you. Vishal, though, there is another question for you which says, are we imagining the B2B model as hostels for single people only? Is what you can start, because that really shorter answer.
Could you repeat that question, Anindita?
No, Dhyan, for you, the question is, have you got any loans from financial institutions such as HUDCO, HDFC for rental housing? What kind of financial incentives do you need for private rental housing? So,
to answer the first part of the question, yes, we did get support from HDFC. But what kind of financial support? I think, see, there is a lot of things which impact cost. Okay, now I think Mr. Vijay mentioned that in the policy, they talk about utility costs being treated at residential level, not at commercial level. But currently, wherever we operate, we all pay commercial utility rates, especially electricity and water.
Yes.
Okay. Then there is this other issue of property tax. Currently, in Bangalore, hostels have a kind of an in-between tax. It's neither commercial nor residential. It's a slightly higher rate than residential, which is better than some of the other cities. And the flip side is it's actually leading to a lot of leakage, because the informal sector is one of the largest players. Okay, I mean, compared to the formal sector, I mean, they're huge, the informal sector, and therefore, as a result, you do not have registered leases. You do not have, so they're not even being declared as operational as either hostels or co-living, whatever you want to call them. So that's a huge leakage, which I think the government should address. And I'm hoping that, because once, even though the policy mentions it, it is eventually up to the states to kind of talk about it. The other thing is, like for example in Maharashtra, one of the things that could actually safeguard the tenant in this case is, say, a long lease. Now what happens? What's your stamp duty? That adds a significant cost to your cost of operation.
Yes.
Now in Maharashtra, if I look at registering anything beyond a 5-year lease, it'll fix me for the rest of my life. It's that bad. Whereas in some of the other states, it's probably a little more reasonable, but I think, one should consider that, because you want to operate within a legal framework, and you make it extremely unviable for you to operate within that legal framework.
Legal framework. True. Very true. Thank you so much, Dan. That is huge. Thank you.
And thank you, Anandita, for asking the panel the questions. And that brings us to the end of the panel. My heartfelt gratitude and thank you to all my panelists. And I've enjoyed interacting with you over the last few days. And I hope I can come back to you when Habitat for Humanity and the entire core group of Center for Policy Research, GIZ, IFC, HUTCO, and others who are working with us can really build something together for addressing the housing issues at the bottom of the pyramid for the EWS section in India. Thank you so much. I'm going to ask my colleague, Anna Claudia, to give the closing remarks to this Policy Lab 3. Thank you so much, everyone.
Thank you, Laura.
Thank you, Lara, Rajan, panelists. This was a great panel. I was taking many notes. I think you will have a wonderful report from this lab. Many learnings from my side. Just quickly, I'm Ana Claudia Rosba. I'm the Regional Manager for Cities Alliance based in Latin America. So I'm here very early in the morning listening to you and learning about the challenges in India and South Africa, also in France. I think the overall picture shows that we do have major challenges, both in developed countries and global South countries like India and South Africa in terms of land. Land is critical. So France has incentives to unlock private land through tax incentives, something that we have less here in the global South. São Paulo has an experience. In the previous lab, we presented that taxation of very new though, taxation of private land, underutilized or vacant. But this is an alternative that we are not looking at in both countries, India and South Africa. Although there is a great availability of public land in India, even though with many challenges to be addressed. No, unlocking public land is not as easy. Experiences in Latin America show that, in Africa as well. So it's also considered an economic asset for the state. So it's difficult to transfer to companies, to the private owners, to social housing, etc. But anyway, there's a huge potential there. And I think the business model presented by South Africa indicates some interesting innovation. While supporting small and medium-sized entrepreneurs, it also helps to increase the local knowledge and to leverage the smaller pockets of land, and also understanding the advantages of densification. No, I took note of Paul's mention of the positive fiscal impacts of densification, and I think he was talking also about, you know, not large scale like we think in Brazil and India, but, you know, small, you know, densification pockets. So this is an alternative of business model for countries in the South. I understand it has a long trajectory, but it now achieved a momentum, right? And like all initiatives, being in India, South Africa, France, the USA was mentioned, public policy and the legal frameworks is a must, you know? So we have sort of compounded this laboratory. So the first one was on policy framework, the second on public policy, and now this is private markets, but they are all interrelated, because clearly in any country, the market will not function without a clear framework, policy framework, and clarity on the legal framework. Of course, the French model is very sophisticated. It has different schemes, arrangements, subsidies. It's fiscally, it's very heavy. Financial alternatives. Also, I'm sure Claude didn't mention, but people were talking at the end about city planning. And this is a strength in French cities, right? So this shows an overall system, ecosystem that has been developed for many, many years. And it has a high degree of sophistication. We are far away to get to those systems, but I do believe from what we heard in this last panel, that there is an appetite from the private sector in India. There's an appetite from the public sector in India. There is a social need, no? The three models presented, they demonstrated that for the private markets, there's a social function. And the challenge now, right, that we have is how to connect this social function and this principle of co-responsibility of the private companies to, you know, sustainable business models that are profitable also for different sizes of companies. What I understood from this last panel is that this current policy might be starting a process of leveraging an ecosystem for rental housing in India, although there is a culture gap, let's say so. There's also an appetite from the consumer side, right? There is a need, demand from the consumer side to access more rental housing. I see that there are many challenges though in the case of India now. The robustness of the current policy announcement has still to be proven, right? The incentives, the clarity of incentives must be very, very transparent to all stakeholders. The land issue, no, is still a big challenge, as it is in all countries. The funding challenges, the example of the US now, I think it's very interesting. There's a small example here in Brazil of social bonus for this very, very innovative starting right now. But I think we have to look at this innovation as well to our countries. And also the challenges, the social challenges, no, for the private sector to operate because there are social needs and they will not be solved with the houses. So they continue, and these clients, these beneficiaries, they will face economic challenges. They are facing permanently economic challenges. There's in India the major gap of the legal framework, but the case of Tamil Nadu shows also an interesting trend. You know? So maybe the national gap can be covered through local legal frameworks and more local protagonism. So it's clear the last interventions demonstrated the importance of the local protagonism, you know, in terms of land planning, stimulate and leverage the local knowledge, you know, to expand the supply of land for affordable housing and for rental housing. Overall, I believe, and there are also many private sector companies from different sizes here. Overall, I understood that appetite is for big scale, because we understand in our countries that the need is big, and business are also big. But there's also innovation in the business sector, and maybe the case of South Africa can bring also some light in terms of alternative of business development. And I understand also from the conversations that many more deep dives are needed, but I appreciate your availability to be here with us today. We'll have one more Policy Lab. This is a collaborative effort. You see on the logos, I will not mention all the organizations involved, because it's too early for me and I might forget some of those, but we do have development banks, NGOs, research centers, international organizations, local organizations. So it's a collective effort to understand the dimension of the housing needs and potential in India, and also what this policy needs, offers to the overall society. In the last interventions, Dharavi was mentioned, so we need to have clear and have clarity about the dimensions of informality that we do have. In all cases, it was very clear that it's very hard to reach out to the poorest of the poor. So this remains as a big challenge. Maybe the rental policy will not be the solution or the right response for these major needs, but clearly there is a niche, and we have to evolve in this comprehension. So thank you very much. Thank you for the co-organizers, and congratulations, Habitat for Humanity. This was, and CPR for always being there and present and co-organizing. This was an excellent event. Thank you.
Thank you, Anna.
See you at the next love.
Thank you. Thank you, everyone. Thank you for joining.
Thank you all.
Thanks a lot.
Thanks, Rajesh. Thanks, Balaji. Thanks, Kian. Thank you, Rajan. Thanks.
Thanks, everyone.
Thanks, Vishal. Thanks, Kian. Bye-bye.
Yeah.
Thank you. Bye, Anindita.
Bye.
Bye-bye. Thank you. Thank you, Claude. Thanks, Anindita. Bye-bye.
Bye.
Thanks, Kian.
Thank you. Bye-bye.
Bye-bye. Thank you. Thank you, Dr. Dalai. Thank you. Thank you for joining.